Well, if you don't mind, let's start with your word of the day.
Yeah, so my word of the day is resilient. I'm continue to be impressed with how quickly this market has bounced back. Fastest recovery ever, 6 weeks on the S&P 500. The retail investor continues to be resilient in wanting to buy the dip. We have not seen capitulate. You know what? It's early in the morning and
Capitulation. I'm going to help you out.
thank you.
Capitulation.
Thank you. Capitulation of the retail investor. And that has been a good thing. Again, likely the key driver to the market's recovery.
So, by the way, I smiled when I was asking about your word of the day because I knew what it was, and we're already starting to hear people kind of question this rally. Steve Cohen was one of them from 0.72. He said he saw the potential for a pullback of about 10 to 15%. The market's retesting the April lows. Do you see that potential? And if so, how would that play out in your mind?
Well, do I see the potential? I mean, there's always the potential for these things. And as we continue to have changes in tariff policy, and the fact of the matter is that the market is a little overbought. But that said, since 2020, we've seen that when the market does have these downturns, the recoveries have been fast and furious. So I actually see any potential downside in the future in the market to be a buying opportunity. Again, as I noted, the market's been quite resilient. The retail investor has been happy to step in. And it's actually the institutional investor that's been a little hesitant. It's probably just based on history. We have an entire generation of investors who grew up with a market that went straight up. There was not a lot of times where it pulled back. And so they've become quite accustomed to the market bouncing back and willing to take that risk. Whereas I think the institutional investor has a little longer memory and is not used to the quick turnarounds that we've been seeing.
All right, very quickly, I want to talk to you about the bond market. We've been talking about it earlier. The two-year yield above 4%. We're going to hear from Jay Powell later today. If he's neutral or hawkish, has the potential to increase those short-term yields even more. Do you think that creates competition for the equity market?
I don't think it creates competition. I think what we see here is the market making adjustments for inflation, potential for inflation that's being caused by tariff policy. There's been debate whether or not tariffs would be inflationary, and I think it's probably too soon to tell. But the bond markets are telling us that they think that inflation short term from tariff policy is going to be higher. We haven't seen it in the numbers, but I don't know that it necessarily causes competition for equities.
Shana, almost out of time. I want to get to your pick. It's Lidos. Very quickly, why is this a good buy today?
Well, we talk a lot about technology, but defense stocks have also had a positive momentum this year. And Leidos is undervalued at 14 times. They've continued to crush earnings. They have a very interesting suite of services, but I think their civilian and commercial services and cybersecurity and IT services is an area of growth, and that's why I really like the stock.